In this episode, we will look at what comprises a company's cost of goods manufactured. A company's cost of goods manufactured includes three types of costs. The first are the costs of direct materials used. Direct materials are the materials that are separately and readily traced to each manufactured inventory item. The direct material costs of the inventory produced become cost of goods sold expense only when the inventory is sold. For example, the cost of steel purchased to be used to manufacture the automobile. We can directly trace the amount of steel that goes into each automobile. That automobile steel cost is not recorded as an expense until the automobile is sold. The second of the manufacturing costs include direct labor. Direct labor costs are the labor costs of the employees that are directly working on each inventory item, and those costs can be separately and readily traced to the finished product. For example, the wages that are paid to an automobile assembly worker. We know the exact amount of time and the cost of that automobile wage worker, so we can directly trace the cost to each automobile as it is produced. The labor costs that we pay to assembly workers do not become an expense until the inventory is sold. Finally, in addition to direct materials and direct labor, the last of the costs incurred to manufacture products are the factory overhead costs. Factory overhead is an all-encompassing title for any cost of producing that is indirect. Essentially, it's all cost of manufacturing except for the direct material and the direct labor cost. These are the factory costs that cannot be separately or readily traced directly to products. For example, indirect labor costs for maintenance, indirect material costs for cleaning supplies, factory utility costs, supervisory costs. These are all costs incurred to manufacture products, but they are not direct materials. They are not direct labor. These are costs that are incurred that we cannot trace directly to each individual product as it is produced. These three manufacturing costs are often combined as follows. Direct material and direct labor costs are combined and called prime costs. These are the prime costs incurred to manufacture a product. Often, we also include direct labor and manufacturing overhead combined and call those conversion costs, or the costs incurred to convert materials to a finished product. If we look at the flow of costs through the inventory accounts, recall, all costs of production are recorded as an asset in inventory until the inventory is sold. So we start with the beginning balance in raw materials, add in the cost of material purchases. Once materials are called into production, those costs are credited out of raw materials and debited over here into goods in process. The raw material account accumulates the cost of materials waiting to be used in production. The goods in process account accounts for costs as the inventory is being produced. This goods in process inventory account may start with the beginning balance. Then during the period, we add in direct material costs, direct labor costs, and all of the indirect costs of manufacturing. As inventory is completed and ready for sale, cost associated with the completed inventory is called cost of goods manufactured. And that amount is credited out of goods in process and debited into finished goods. Finished goods is the inventory account that keeps track of all cost of inventory that is completed and ready for sale. So we may start with the beginning balance. We add in the cost of the inventory that was manufactured and completed. And as inventory is sold, we credit that account for the cost of the goods sold. So what you see here is that all costs of production are recorded in one of these three inventory accounts. The costs of production are reported on the balance sheet, except for the cost of the inventory that is sold. The cost of inventory sold is reported as an expense on the income statement.